So we'll be moving into statement of financial position, financial statement. Don't forget that I told us that we have financial statement, and the component of financial statement as follows. The component of finance, you can see that the statement is in plural form. That means it is not only one statement. So we have what we call statement. We have statement of profits, statement of profit or loss, and other comprehensive income. We have statements of financial position. These are the components of financial statement. These are what makes up the financial statement. We have statement of financial position. I've taught us this earlier. We have what we call statement of changes in equity. 4, we have what we call statement of cash flow. And we have 5, note to financial statement, or you call it explanatory notes. These are where you see the breakdown or the workings of items that has been reported in order in statements 1 to 4. So we call it note to financial statement or explanatory notes. This is where you see how some disclosures, some information are provided about the items of financial statement. So this night now we'll move into statement of cash flow. By tomorrow we should be able to look at statements of profit or loss account and statement of changes in equity. So we are going to look at statement of cash flow this night. So let's look at how to prepare statement of cash flow. Hope you can hear me properly. Hello. So let's move forward now. So let's go. These are the components of financial statement. So let's move into one of the components, which is statement of cash flow. We have what we call statement of cash flow. So what's the essence of statement of cash flow? What's the essence of statement of cash flow now? Am I communicating? The essence of statement of cash flow is to show the movement of cash inflow and cash outflow. That means as cash is going out and as cash is going in now, it's coming in, is to show the movement of cash inflow and cash outflow. That means to show the movement of cash inflow and cash outflow. That means the inflow and outflow of cash and cash equivalent. That's the essence of statement of cash flow. So statement of cash flow is prepared to show the inflow and outflow of cash and cash equivalent. So what do you mean by cash equivalent? Cash equivalent. Yes. Okay. Statement of cash equivalent are short-term investments. That means those investments that can be easily be converted into cash. Example, government treasury bond. They are example of cash equivalent. Am I communicating now? So we have two methods of solving cash flow. We have method of solving cash flow, method of calculating or preparing cash flow. We have what we call indirect and direct. Now we have what we call indirect method, direct method, and direct method and indirect method. Now we have direct and indirect method. These are the two methods of calculating or presenting cash flow. Now before we move to direct and indirect, now the cash flow is divided into three. That means cash flow is divided into three. Under direct and indirect method, we have cash flow from operating activities. We have what we call cash flow from investing activities, and we have three: cash flow from financing activities. Now under these two methods, now that means you present cash flow from operating activities and cash flow from investing activities and cash flow from financing activities. If you are being asked in the exam, they are going to give you the method that you are going to use to calculate the question if you are being asked to prepare statement of cash flow. Now under, I told you that either of the two, all cash inflow and cash outflow is grouped into three. We have operating activities, investing activities, and financing activities. But however, the difference between direct and indirect is cash flow from investing or from operating activities rather. That means the way you will calculate your cash flow from operating activities is different from direct and indirect. But however, for cash flow from investing activities and financing activities remain unchanged. It remain unchanged. So it remain unchanged for both indirect and direct method. Now that means under investing and financing activities, for either direct or indirect, it is the same way you prepare your direct method and your indirect method. For cash flow from investing activities and financing activities, it will be the same. So the only difference between the direct and indirect is how to determine or how to calculate your cash flow from investing activities. That's the only difference between the two methods now. So let's go to the first method now. Let's go to the first method, which is direct method now. Direct method. So I won't be taking time. I don't want to take time to be to be explaining the format now. The format for direct and indirect method is in your material. You can see the format in page. Please look at the format very well. It's in page 238. So in page 238, you will see the format for direct method. So you will see under operating activities, you see cash generated for goods or service rendered. That will be cash inflow. While cash generated on revenue is inflow, while cash paid to supply is an outflow because money is moving out of your organization. Cash paid to employee or on behalf of the employee is cash outflow because when you pay your employee, it means cash goes out. So you will need to calculate. That means when you add all those things together, you have your cash from operation. You now need to calculate your tax paid, amount of tax that was paid for the year. You deduct it from your cash from operation, and you have your net cash inflow or outflow from your what's it called? From your operating activities. Now you now go to investing activity. Investing activities are mostly where you can find your investing activities is in your statement of financial position. That means when you buy an asset, you are investing. When you sold an asset, it's under investing activities. So when dividends is received from a particular investment, it's under investing activities. Now, under investing activities, we have cash paid on PPE or intangible or investment. They are under investment. They are under investing activities, and this is refers to as when you pay cash. It means it's a cash outflow. We have cash received on PPE, intangible assets, investment. That means when you dispose now, when you sell any of your assets, what do? What happen? You receive cash, so it will be cash inflow rather. So cash pays to acquire equity and debt instrument of another entity. That means when you buy shares of other company, you are investing. So it will be cash. It will be under investing activities, and it will be referred to as cash outflow, because when you buy the shares of a company, you are paying for it. So it will be cash outflow. So you have cash advance and loan to other parties. When you give loans out to maybe to your staff or to another entity, now it will be under investing activity, as it will be regarded as cash outflow. So now dividends received, interest received, that means interest you receive maybe on a particular debt, on a particular money that you have borrowed an entity, or you have put money in a fixed deposit account, is regarded as is under investing activities. So cash interest received and dividends received for maybe for the shares of other companies that you have bought. So don't forget that the reward for shares is dividends. So all this will be under investing activities. So let's go to financing activities. We have proceed from the issue of shares. That means when you issue the company shares, when it's being issued out, when you issue it out, you receive money from it, because people will subscribe for that share by buying that shares now. So it will be under cash inflow. So it is inflow under investing, under financing activities. We have cash paid to acquire or redeem a shares. Sometimes companies normally redeem shares. They redeem shares, so it is regarded as cash outflow under financing activities. We have cash proceed from loans. Cash proceed from loan, debentures. They are under financing activities. That overdraft that they said, okay, is under financing activities. Now, when you pay back the loan that you have obtained, maybe there's payment or you pay for a loan, repayment of loan, it is under financing activities, and it will be treated as cash outflow, because when you pay money out, it goes out. Now, they said cash repayment on borrowing is under financing activities, and it will be regarded as cash outflow. Now, we have interest paid and dividends paid is under, can you see now? Interest paid and dividends paid is under financing activities. So after you have done this, you add it together, you have your net cash flow from your financing activities. Now you need to calculate, you now add the three together to give you your cash and cash equivalent for the year. Cash and cash equivalent for the year. You now go and pick your cash and cash equivalent in your financial statement, which they will give you the opening balance and the closing balance. So this is how to calculate your cash flow from direct method. And I've told you that under investing activities and financing activities, whether you are calculating using direct or indirect method, it remains the same. It does not change. But the only difference between direct method and indirect method is cash flow from from operating activities. So it is cash flow from operating activities. The way it is calculated under direct is different from how it will be calculated under indirect method. Those are the differences. That means under cash flow from investing activities and financing activities does not change for either direct and indirect method. That means the same way it is calculated, the same way in direct and indirect method. So let's go to this question now. So let's go to this question and solve for indirect method now. Illustration 19.1 is in page 241. 241. The following is the statement of financial position of Odumeni Limited as at December 31st, 2019. Now they are giving us December 31st, 2019 and December 31st, 2018. You can see now that they give us the opening balance and the closing balance. We have 31st December 2019 and 31st December 2018. Now you can see that this is the closing balance in 2018. The closing balance in 2018 is the opening balance in 2019. That means this is the opening balance. Please note the opening balance in 2019 and this is the closing balance in 2019. Please note that, because the closing balance in 2018 will be the opening balance, because the opening balance will be January 1st, 2019, and the same, it is the closing balance in 31st December 2018 that will be the opening balance in 2019. Please note that. Now, so we are giving the opening balance of assets and liability and equity now in our question, and we are also giving statement of cash flow. That means if you are being asked to calculate statement of cash flow, they will give you your statement of financial position and statement of profit or loss account or statement of comprehensive income. So you are giving statement of comprehensive income. So you are giving statement of comprehensive income. Now they now give us an additional information. They say additional information. Depreciation of 5 million is contained in cost of sales. Depreciation of 5 million is contained in cost of sales. Please note that intangible asset at 31st December 2018 was a working in progress, and the increase as at September 2019 represents payment for its completion. So the intangible asset will be put to use from 1st January 2020 now. They said contained in trade and other receivables as at December 31st, 2018 and December 31st, 2019 was 12 million and 5 million respectively for unpaid cash advance. The remaining amount in the trade account line item relates to credit sales. There were impaired receivables of 1.5 million at the beginning of the year period and 1 million at the end of the period. Already net from trade receivables and related to other income represented in the statement of comprehensive income. Note 4. Trade and other payables related to inventory sold in the year, employees salary and other expenses. So we have current tax liability does not involve any revision or adjustment for under or over recognition in the prior year. The increase in share capital was subscription received in full in clear fund. They said prepare the company statement of cash flow for the relevant period using the indirect method. So if you are given a question like this that is somehow long like this, what you first do in the exam is for you to know, go and read the requirements. What are you asked to prepare? What are you asked to prepare? So when you read the requirements, you cannot go to the body of the question to now go over it. By going over it now, by reading it, the idea will be dropping on how to calculate it. But when you first read the question from the beginning to the end, you will still go back to it, but because when you now know the requirement after the end of reading it now, you still go back to it. It will consume time. So it is appropriate for you to read the requirements and now read the body of the question. So let's prepare our statement of cash flow now using direct method. So please, you will write the name of the company down. What's the name of the company? What's the name of the company? Hope we are following. Is Odume Limited. You write it. Now we'll now write statement of cash flow as statement of cash flow for the year ended 31st December 20. What's the year? That should be 2019. So don't forget, your naira sign was approximated, so you approximate it. So it has been approximated to the nearest 1,000. So look at it now. Under a direct method, I will advise that you go over and check the format now, so that you can know the format. It's very appropriate and it's very necessary and vital and important for you to know the format. Now, so what the first thing for us to do is for us to calculate our cash flow now. Don't forget, I told you our statement of cash flow is divided into three aspects now. We have cash flow from operating activity. So we have cash flow from operating activities. So let's look at it under direct method. Now, from this question now, you need to calculate your cash collected from your customer. Cash collected from customer now. Cash collected from customer. So how will you calculate cash collected from customer? Because it's under your finance, is under your operating activity. So question. So let's look at it now. Let's go to workings. I'm coming. Let me check the videos whether it's recording appropriately. Yeah. So let's go to workings 1. Workings 1. Workings 1. You have to calculate cash receive. It can be collected or receive from customer. So how do you calculate your cash received from customer? Cash received from customer. How will you calculate it? So it's quite very simple. Now, how do you calculate it? Don't forget that trade receivables. What's trade receivables? That means the amount that your customer are owing you. So what's your opening trade? What's your opening? The opening balance. Opening balance of your trade receivables. Your trade receivables is in your statement of financial position. So what's the opening balance? That means 2018 balance. That's 160. That's 160,000. 160,000 is your opening balance. 160,000. But in the additional information, they told us in our additional information that in our additional information, where is it? They told us that 12 million and 5 million is for unpaid cash advancement. So you are going to remove that that's 12 million in. Okay, 12 million is the opening balance. Don't forget that this has been transformated to nearest to thousands. So 12 million will be 12,000 because when you add 3 zeros to the back, it will give you 12 million. So it means that this one is 160 million. Please note that. So you remove the unpaid cash advancement because it's not part of your trade receivables. So how much will you have now? How much will you have? Follow. How much will you have? If you remove it, let's be fast. So you have 148. Now, what is your revenue for the year? That means your revenue for the year. That means how much goods have you sold for the year? That means revenue for the year. Now, how much goods have you sold now? You have sold 150. Is your statement of profit or loss account, your revenue for the year. So you had it. That will give you 892. Now, this means that this is the amount you are expecting from your customer now for the year. But let's look at the closing balance. That means the closing balance of trade receivable, closing balance of how much the customer is still owing you. Closing balance of trade receivables, please. So what's the closing balance? So the closing balance is 120, but they told us that there is unpaid cash advancement, which is not part of trade receivable. It's not trade receivable, so you have to remove it. So 5 million. So don't forget that I've told us that we have approximated to the nearest thousand. That means this 5,000 means that there's 3 0 at the back now. So that will give us 115,000. Now 150,000. That means this is the amount we are expecting from our customers to pay. The amount they are owing us with the goods that we have sold for the year. This is the amount 298. Now it means that this is the closing balance. That means this is the amount that the customer are owing us at the end of the day. That means cash collected now. Cash received or collected from customer will now be what? Will now be different between this now. This is the amount we are expecting. This is the amount they have still owing. That means they have paid. They have paid 100 and what's our revenue? What's our revenue in the question? These people are not following me at all. What's the revenue? It is 150,600, please. So if you remove, that means if someone is owing you this amount and by the end of the day this is the amount they are owing you, that means they have paid part of it now, because you are looking at cash flow. Is for you to know cash flow is only concentrated, is only focused on cash inflow and cash outflow. How much you have collected and how much you have how much has come into the organization and how much cash has gone out of the organization. So that's what we are looking at now. So what will be the let's be fast. We are not even following. No problem. So 183,600. That will be the cash that they have collected. Are you getting what I'm saying now? Sir, if someone is owing you this amount, this is the opening balance of what they are owing you, and this is the amount of goods that you have sold for the year. That means this is the amount that they are owing you. This is the amount you are expecting from your customer. So by the end of the year now, this is the amount that the customer are still owing you. That means they have paid cash of 183,600. That means you go to this place now, you now say cash received from customer. That's workings what? Workings 1. That's how much? 183,600. Am I communicating now? Now, let's go to the second question now. So let's determine how much was paid to the supplier. How much was paid to the supplier now? So let's look at it. Now, so let's go to 2. Cash paid to supplier. So if you are calculating cash paid to supplier and you are using this, don't forget the method we are using here is we are using direct method. Using direct method. So how do you calculate? The same way you calculate for your cash received from your customer is how you calculate your cash paid to your customer. That means you need to know how much you are owing your customer at the beginning of the year and how much goods that you have purchased. So how do you do that? It will be your opening balance, of your trade payables. Don't forget that trade payable is the amount that you are owing your supplier now. So how much are you owing your supplier at the beginning of the year? At the beginning of the year, how much are you owing your supplier? So you are owing your supplier 7,000. Am I communicating now? You had, your purchases is not given in this question. Don't forget that your purchases will be inside your cost of sales. In this question, they didn't categorically state your how much your purchase is now. How much you have purchased, how much goods you have purchased from your customer, from your supplier. But don't forget that when calculating cost of sales, it will be opening inventory plus purchases. So automatically your purchase is in your cost of sales. So if you are not giving purchase directly, you add your cost of sales. So add your cost of sales. Cost of sales. So how much is your cost of sales? In the question, we have 178,000. But don't forget, in our additional information, they said in our cost of sales that there is depreciation there of 5 million. So you remove that depreciation. So assuming depreciation was not added to it, you just add your cost of sales to it. But depreciation is supposed not to be part of your cost of sales. So you remove it. How much will you now have? So if you remove it, you have 173,100 naira now. So you had, don't forget, it is not only because this information they have given to us. This information they have given to us now, we need to when you had so how much will you have? So add it together. What will you have? This will be 100, this will be 0, this will be 14, that's 15, this is 125. This is the amount that you are owing your supplier now. So let's go to the closing closing balance of your trade receivables, of your trade payables rather. So what's your closing balance now? Is in your statement of profit or loss account. Your closing balance is I think it's 16,000 of your trade payables and other payables. So it is trade payables and other payables. Now, if you are given a question like this, that means other payables, that means all these your accrued expenses are also included in it. So please, so because other payables is involved, let's just make it so it will not only be for cash paid to supplier, it will be cash paid to supplier and other operating expenses, other or operating expenses. Let me just say operating, because that your payables is not only payables, it is payables and other payables. Am I communicating? So it will not only be cash paid to supplier, and it will include other operating activities. So what are the operating expenses now? You add it to it. So your operating expenses are your administrative expenses. What are administrative expenses? Is in your statement of profit or loss account. You add your administrative expenses to this amount. So what are your administrative expenses? We have 3,000. Your marketing, there's marketing expenses. You add it to it also. So how much is your marketing expenses? 10,800. 10,800. So what will you have? What will be the total? What will be the total? This one is even wrong, sir. This is 7 now. Nobody to correct me. I'm all alone here. So this should be 1. This should be 10. That's 0. That's 8, 1. So when you add this and this together, you have 193,900. So 193,900. These are the expenses that you have incurred. Am I going? This is the amount that you are owing your supplier and other operating expenses that you are supposed to pay. Now let's look at the closing now. Your closing balance of trade receivables and other receivables. Now I've shortened it. So what's the closing balance? We have 16 million. This is the amount you are owing. Am I communicating? This is the amount you are owing for the year. But at the end of the year, it means you are now owing 60 million. That means you have what? You have paid the differences now between the closing balance and the amount you are supposed to pay now. This is the amount you are owing. This is the closing balance. So that means this will be, what will be the balance now? It will be 177,900. That will be your cash paid to supplier and other operating expenses. So you move your cash paid to supplier and other operating expenses. So that's workings workings 2. So that's how much? 177,900. Now I think that's all now for your operating activity. So add it together. So don't forget, this cash received from your customer is a cash inflow. Am I communicating? Now, cash received from customer. If they say you receive cash from customer, is it not cash inflow? That means it's coming in. That means if they say cash paid to supplier and other operating expenses, what do you mean? What does that mean? It means cash is going out. Yeah. So whenever you have inflow, outflow, you bracket it. Bracket in accounting means minus. So because it's a outflow. Once you have cash outflow, what do? You bracket it. So it means minus. We have removed this from 183,600 minus 177,900. What would that give us? That will give us 6,200. This 6,200 is our what we call cash from operation. So if it is this one now that is greater than this, so you put in bracket. That's what I'm saying. This will be anything you see in bracket. It means it's carrying minus. So 100 because this one is bigger than this amount. So if it is negative, you put it like this. Please. Now you need to calculate. Don't forget, looking at the format, you need to calculate your income tax paid. You need to calculate income. We need to know the income tax paid now. How do we determine our income tax paid? Our income tax paid. Am I communicating now? So we need to calculate our income tax paid. So I will need to wipe up these aspects. Are we through with the workings 1 and workings 2? Can I wipe it off? Hello? Can I wipe it off?
Yes, sir.
Okay, thank you. So let me wipe this place off to calculate. So let's go to workings 3 now. We want to know our tax paid. Workings 3. Tax paid. So how do you calculate your tax paid? It means that for you to calculate your tax paid now, it will be your current tax payable. You know, tax payable is your current liability. We have opening balance and closing balance. That means amount of tax that are owing at the beginning and at the closing stage now. So that's how you determine it. So it will be opening balance of tax payable. So what's your tax payable? Is your current asset. Your tax payable is your current liability rather. So go to your current liability, you will see current tax payable. So what's the opening? We have 15. What is your tax expenses for the year? That means the amount of tax that are owing that you are supposed to pay for that year now. It will be your statement of profit or loss account. So it's 25. Go to your statement of profit or loss account, you see it 25. That means you are owing 1,500 and this year you have tax expenses of 2,500. So what will now be how much you are expected to pay as tax? That will be 4,000. Now you now go to the closing balance. Your closing balance of tax payable. That means how much tax you are owing at the closing stage now. So you go to your current tax liability. Current liability. You see your closing balance is 3,000. Look at it now. You are owing the government 4,000. By the end of the period, you are now owing 3,000 naira. That means you have paid what? That means you have paid a cash of 1,000 naira as tax. That means you have paid tax now. So tax paid. So that means cash that has gone out, because what we are looking at is the cash that you have paid, cash that have come in, and cash that has gone out. That means inflow and outflow of cash. Now, so workings 3 now, we have cash 1,000. So you less it. So what will be your answer now? That will be 5. So this, you will just bring it here. It will be 5,200. So this 5,200 is your net cash flow from operating activity. So you have done for that now. So we will now go to the second, which is cash flow from investing activity. So let's go to cash flow from investing activity now. This is quite not hard. It is not hard. So when you are going to cash from investing activities, you want to know whether there is sales, whether you acquire assets, or you dispose. You know, when you dispose an asset, when you sell an asset, what happens? Money comes in, because when you sell, money comes in. But when you buy an asset, what mean? That means money is going out of the organization. So that means disposal of asset, it is inflow, while acquisition or purchase of assets, of non-current assets, it is outflow. So let's go now. So how do we determine whether we have purchased an asset or not? Now let's look at it. It is not hard. Now it is not hard. So let's look at it now, whether an asset was purchased or not. So when you are calculating under investing activities, the place you are supposed to target mostly is your non-current assets. So what are the items under your non-current assets? So let's see. We have under your non-current asset, what do we have? We have PPE and intangible assets. So let's know whether there is cash received or cash paid. For what? For PPE. Whether we acquire PPE or we dispose PPE. Don't forget that when you acquire, there is cash outflow. So what's the opening balance now? The opening balance of your PPE now. What's the opening balance? The opening balance is 45,000. Now, you less your depreciation. Less what? Depreciation from your opening balance. Depreciation for the year. What's your depreciation? Is your additional information. They said depreciation is 5 million. So 5 million. Don't forget that it has been approximated to the nearest to thousands. So that 5 million will be 5,000. So once you less it, what do you have? Once you less your depreciation, what do you have? You have 40. That means 40. What's the closing balance now of PPE? What's the closing balance of PP? Is 40. That means in this question, there is no purchase or sales of assets. So it's dash. Am I communicating? Am I communicating? Now look at it now. Let's assume that what you have here is 140. And by the closing balance now, you now have 40,000 naira as the opening balance of your PP. What has happened now? That means you have PP of 140,000. Now by the end of the year, the value of your PP is 40,000 naira. What has happened?
Inflow of cash.
What has happened? That means you have sold part of these assets. That means you have sold what? 100,000. Because the value has decreased. That means you have sold part of it now. So it will be cash received from disposal of PPE. Am I communicating? Now, but let's imagine that this place is let's say this place is 60. And just imagine that your closing balance is 60. What has happened? You have an asset of 40,000 naira, but by the closing balance now, the value is 60. What has happened? Yes, thank you, sir. My smart daddy. Yeah, we have purchased. So in this question now, when there is no since we have a zero, just ignore it. You don't need to put it here. But if there is difference between the two now, it can be either what? Acquisition of PPE or disposal of PPE. So let's go to intangible assets. Look at it now. Look at intangible assets. So let me open workings for intangible assets. Look at intangible assets. That one, there is no need for you to work anything else. Look at intangible assets. We have, what's the closing balance? 20,000. Why the closing balance is 30? Am I right? Am I right? So let me just try to work something out now. For intangible assets, we want to know whether there is cash received or paid for intangible assets. Look at this out. What's the opening balance?
Sorry, sir, I cannot see the board.
Can you see it now?
Yes, sir.
You can see it now.
Yes, look at that.
So opening balance. What's the opening balance of your intangible asset? It's 20. Am I communicating now? You know, I've told you that in intangible assets, you don't depreciate intangible, you amortize it. Is there amortization for the year? The reason why I'm putting all these things is that you may be given an exam question where they will put amortization. Is there amortization for the year? Amortization is the gradual decrease in the value of intangible assets. It's the same thing as depreciation, but you don't call it depreciation for intangible assets. You call it amortization. Is there amortization for the year? That means annual amortization. In the question, there is no amortization. So you have 20,000 naira. So what's the closing? Assuming there is amortization, you do what? You less it. Am I communicating? You less it the way you do it here. What's the closing balance? What's the closing balance of your intangible assets?
20,000.
No, closing balance. Is it 20,000?
Okay, no.
I think it's 30. The problem that people normally face when they are solving what's it called? Cash flow is that they used to interchange the opening and the closing. Please don't interchange it. Closing balance is 30. Look at this question now. That means the value of your intangible asset is 20 before, but the closing balance is now 30. What has happened now? What has happened?
You purchase more intangible
Yes, it
assets.
is correct like that. But in the additional information, they said the increase was due to payments for the completion of intangible assets. So you may be right. That's 10. So that 10 will now be payment for intangible assets. So payment for intangible assets. Is it cash inflow or outflow? It will be outflow, right? Because it's payment. That's 10,000 naira now. Am I communicating now? So that's workings 5. That's working 5. So we are not through with that now. So let's move forward now. Let's go to now. In the workings, when we are doing the format, we are told that if there's any payment that is made to the let's look at it. They said under investing activities, they said cash advance or loan advance to other parties. Cash advance or loan advance to other parties. So in this question now, there was cash advance and loan advance that was given to the staff. There's cash advance and loan advance. Please go and study this format very well. So look at it now. Look at the question. They said there are they said 12 million and what's it called? This 12 million. Yes, now. They said contained in trade and other receivables. That's question 3. Additional information 3. Contained in trade and other receivables as at 31st December 2018 and as at 31st December 2019 was 12 million and 5 million respectively for unpaid cash advancement. So when when cash advancement is under investing activities, so look at it now. In this question, you don't even need to look at it. What's the closing balance? Sorry, what's the opening balance? The opening balance was 12 million, right? Let's communicate. The opening balance was 12 million, am I right? Oh yeah. Are we there? The closing balance is 12 million. Why the opening balance was 12 million? Why the closing balance is 12 million, right? Sorry. Look at it now. Sir, they say unpaid cash advancement. That means they have provided a loan to another entity or to their staff. We don't know. Now, look at it, sir. They said the opening balance as at 31st 2018 and at 31st December 2019, it was 12 million and 5 million. Now, look at it. Look at this now. The opening balance was 12 million. Why the closing balance now at 2019 is 5 million? What has happened? People were owing you 12 million before. By the end of the year, it is now turned to 5 million. What has happened? Hello, what has happened? It's a logical thing. What has happened now? They have paid part of it. So if they have paid part of it, will it be cash inflow or outflow? That means it will be cash received for what? For cash advancement. So you don't need to do workings. Just do 12 minus 5 because this has been approximated to the nearest 1,000. That will be 7. So it's a cash inflow. So you leave it like that. Now, do we have any other question? Do we have any other thing? Do we have any other thing? No. That's all for your investing activities. That's all for your investing activities. So add it together. So what will be your net cash flow from your investing activities now? So add it together. That will be what? Net cash flow. Oh yeah, let's communicate. Net cash flow from investing activity. What will be your net cash flow from investing activity? Minus 10,000 plus 7,000. That will give you what? It will give you minus 3,000. Am I correct?
Yes, sir.
So let's go to cash flow from financing activities. From financing activities now. Now, your financing activity, they said cash received from issue of shares, dividends paid, interest paid. Am I communicating? In this question, there is no interest received. Interest received and dividends received will be under cash from investing activity. Dividends, but dividends, paid and dividends received will be under investing or financing activity. So let's go to our question now. We want to know whether there is issue of shares, whether they raise shares for the year. Look at it now. We want to know whether shares was raised. You know, when you issue share, what happen? People pay you for the shares you have issued, right? If an entity should issue share, they will receive money now. So we want to know whether the entity issue shares for the year, whether there was issue of shares for the year. So how do you know now? So you just go to your equity. Go to your equity in your statement of financial position. So under equity, what's your equity? Your ordinary share. What's your ordinary share capital? Hello, what's the ordinary share capital? The opening balance is 100,000. Am I communicating? Hello, are we together?
Yes, sir.
So what's your ordinary share capital? It is 100,000 naira at the opening, while the closing is 150. Now let me note this. You may be given a question when you have ordinary share capital and share premium in your equity. For you to know whether there is, in this question you are only giving share capital. That means if you are giving share premium, you will add the opening balance and the closing balance of ordinary share capital and share premium. You add it together. The closing balance of ordinary share capital and share premium, you add it together. You now check the differences. If it increases, that means they have issued shares out. Am I communicating? They have issued shares out. And if it decreases, that means they have paid for what? For the redemption of shares from the shareholders. So look at it now. There is no share premium here. So just look at it now. The opening balance is 100,000 naira, while the closing balance is 150. Am I right? That means what has happened now? They have received what? Cash from issue of shares. That means they have issued additional shares now. So that means cash received from issue of shares. So that will be what? It will be 150,000 minus what? 100. Because initially the opening balance was 100. Now it has increased to 150. That means they have issued additional shares worth of 50,000 naira during that year. So we have 50,000 naira for cash received from issue of shares. Am I communicating now? We want to know whether there is dividends paid for the year. Am I communicating? Now, I want to know whether there is dividends paid for the year. Let's look at it now. So let's just close this place. Let's see. There is dividends paid. Whether there is dividends paid for the year now. Jesus, the Son of God. I believe in you. I believe in you. So we want to know whether there is dividends paid. Look at it now. When you are calculating dividends paid, you know dividends is paid out of retained earnings. It is paid out of retained earnings. So let's look at whether dividends was paid. So let's look at it now. So this 5 working 6 now. I want to know whether there's dividends paid. So how do you know whether there is dividends paid? It will be your opening.
Because you cannot see the board, sir.
Okay. Can you see it now, sir?
Yes, sir.
So you have opening balance of retained earnings. So what's the opening balance of your retained earnings in your statement of financial position? That's 110,500. Now look at this question now. There was actually a loss for the year. They made a loss. Am I communicating? So loss for the year. Now assuming it was profit that they made for the year, you will add profit. But because of loss, you know loss is an expenses. It's always in what? In negative side. Look at it now. In your statement of profit or loss account, they made a loss of how much? Of 49,500. So they made a loss of 49,500. Now that means if it was actually a profit, you add it to it, but because it's a loss, you subtract it. So what do you have? Don't worry, let me calculate it here because we don't like calculating. So that's 110,500, 110,500 minus 49,500. What do you have? You have 60 what? 61. That means the profit that they have for the year is 61. So what's the closing balance? So who can tell me what's the closing balance of retained earnings in your statement of financial position? So look at it in your statement of financial position. What's your retained earnings? Let's say the retained earnings now, look at it. Your closing balance. Hope we are following, sha. Okay. Your closing balance is how much of your retained earnings? Closing balance of retained earnings under equity is 61. Can you see now? That means there was no dividends paid for during the year now. So there is no dividends paid. So dividends paid is what? Is dash. So there is no dividends paid. Now assuming your closing balance of your retained earnings, let's say, is 60. That means you have retained earnings of 61 and your closing balance is 60 now. That means they have paid 1,000 naira as dividends, because dividends is paid out of retained earnings. And if dividends is paid out of retained earnings, what happens to your retained earnings? It will reduce. But in this question now, there is no dividends paid because what you have is 61 and what you have at the closing is 61. So let's go now to financing now. We want to know whether they borrowed loan. We want to know whether there was loan that they borrowed during the year. Maybe they received loan, they borrow more loan, or they have repaid back some of the loan they are owing. Am I communicating? Okay. Now let's look at whether there's loan. So when you are calculating whether there is loan repayment, you go to your non-current liabilities. So you pick your items under your non-current liabilities. That means don't pick deferred tax liability or pension liability. They are not related to cash at all. So it is something like debentures, debentures, bank notes, bank loan. That's what you pick. So look at this question now. I think what we have under our non-current liability is bank notes. So look at it now. At the opening balance, we have 34,000. 34,000 as our bank note. But at the closing balance, we have none. What has happened? Who can tell me what has happened? At the opening balance, they have 34,000 as your bank note. But at the closing balance, it is zero. What has happened? Hello? Okay. Oh. So it means that they have repaid back their loan, because loan repayment has reduced. They have repaid back the loan. They have repaid back all the balance. That means, if assuming the closing balance now is 4,000, that means they have repaid back 30,000 out of it, because opening balance is 34, while closing balance, I just imagine that, let's say imagine the closing balance is 4,000. That means they have repaid back 30,000. But in this question, they have repaid back, so it will be cash paid for loan repayment. That will be 34,000 minus zero. That's how much? That's 34,000. So you have repaid. That means if it increases now, let's say the loan is at the opening balance is 34. While let's imagine that the opening balance is 34, while the closing balance is 40. That means what has happened now? They have obtained more loan of 6,000 naira. So it will be cash received. But if it reduces, it will be cash paid for repayment now. Am I communicating? So let's go to the last aspect now, which is interest. We want to know whether there is interest. Don't forget, we have calculated for dividends. So let's look for interest paid. So let's look for interest paid. So we want to know whether there is interest paid. Interest paid. So interest paid now, in our current liability, do we have what we call interest liability? That means owing interest. We don't have opening balance of interest payable or interest owing. We don't have. It is dash. Do you see it in your current assets? So what are the interest expenses now they have incurred for the year? Interest expenses or finance costs, we call it, or finance cost for the year. It will be your statement of profit or loss account. How much is it? Finance cost is 6,200. That means the company are actually owing. That means the amount they are owing is 6,200. What was the closing interest payable? That means in this question there is no interest payable, because when you check your current liability, there is nothing like interest payable. So your interest payable is what? Is dash. In this question now, how much will now be your interest paid? That means they are owing 6,000. The amount they are owing for the year, it is 6,200. By the end of the year, they are not owing any interest. That means they have paid the whole 6,200. That's the interest paid. This is our interest paid. So interest paid now. Workings 7. We have interest paid of 6,200. So we have solved for our cash flow from financing activities now. So what will be the total now? So interest paid to be dash. So what will be the total? Hello, are you following me at all? Are you following me at all, sirs? You are trying to follow me. So look at it now. So we have calculated our interest paid now in working 7, is it? So please, 50 minus 0 minus 34,000 minus 6,200. What would that give us? That will give us 998. So this 9,098 will be our cash flow. Sorry, our net. It should be net cash flow from financing activity. So to know our cash and cash equivalent for the year, so our cash and cash equivalent for the year will be 5,200 minus 3,000 plus 9,800. That means the net cash flow from operating activities, the net cash flow from investing activities, and the net cash flow from financing activities. Now, so you add these three. That's why I created this column. So you add the three together. That means 5,200 plus minus 3,000 plus 9,800. What would that give us? Well, let's be fast. What would that give us? It give us 11,600. No, that should be 12,000. So look at it. 5,200 minus 3,000 plus 9,000.
I said 5,200 minus 3,000. That is
that would be what? 2,200. Yes, plus 9,800. 12,000. Yeah. So that means you have what? Your answer will be 12. So you have cash. So should I work it here? Okay, let me manage the board. We have cash and cash equivalent for the year. It will be, that's 12,000. Now look at it now. Look at it. So you need to calculate your cash and cash equivalent at the beginning of the year and at the closing of the year. That means what you have calculated at the beginning of the year and at the closing of the year must give you your cash and cash equivalent for the year. Look at it now. Look at it. So let's look up now. So I'll wipe this place off so that we can continue. We can continue from here. The board cannot contain that aspect now. So let's continue. So let's calculate our cash. So let's calculate our cash and cash equivalent at the beginning of the year, or you call it at the start of the year, anyone you want to call it, at the beginning or at the start. Now this is how to calculate your cash and cash equivalent at the beginning now. So your cash and cash equivalent at the start, that means at the start of the year, that's what we mean. It will be your cash and bank, or you call it cash, cash and cash equivalent if you have. You have your bank, you add it. If you have what's it called? If you have short term investments, those your short term investment is what is your treasury bond, government treasury bill. So the example of your short investment. So if it's there, you add it, and you less your what? Your bank overdraft. So if there's bank overdraft, you will less it. So, but in this question we are solving now, there's only cash and cash equivalent. There's no bank, there's no short-term investment, and there's no bank overdraft. So so this is how you calculate it to get your cash and equivalent at the beginning or at the end. This is how it will look like. Am I communicating? At the beginning, at the end, and this is how it will look like. But in this question now that we have, it's only cash and cash equivalent that we have. So what's our cash and cash equivalent at the start of the year? Is in our statement of profit or loss. Is in our statement of financial position. So what do we have? Because we don't have bank overdraft in our current assets, in our current liability. We don't have short-term investment. We don't have bank. What we have is cash and cash equivalent. What's our cash and cash equivalent at the beginning? Look at it. It's there. It's there. That's 28,000. Look at it now. That means your cash and cash equivalent for the year is 12,000. From the question we have solved, 12,000 plus 28,000. What do you have? 12,000 plus 28,000. What do you have? Let's be fast. Let's communicate. Let's be fast. 12,000 plus 28,000. What will you have? 40,000. Look at it now. So that means it is 40. Look at your cash and cash equivalent at the end of the year. At the end of the year is what? At the end of the year is what? That means at the closing balance. What's the closing balance? That's what I mean. Go and check your question. It is 40. If the answer is not 40, that means it's wrong. It's wrong. Am I communicating now? That means I have told you that the way you calculate your cash and cash equivalent at the beginning of the year or at the start of the year, that's how you calculate your cash and cash equivalent at the end of the year. That means your cash and cash equivalent at the end of the year will be cash and cash equivalent, bank plus short-term investment minus bank overdraft. Whatever you have at the closing balance must be the same thing with what you have in your financial statement. Am I communicating now? So, but if I'm giving cash flow in the exam and I see that my answer is not balanced, what I will just do is that I will calculate my cash and cash equivalent at the beginning and cash and cash equivalent at the end. Look at it now. So I already know my cash and cash equivalent. What's at the end is in my financial statement. I already know it. That is 40. I'll write 40 here. My cash and cash equivalent at the beginning of the year, I know it's 28. Can you see now? The difference between 40 and 28 is what? That's 12. So if my answer is not right, I will change this one. I will just write 12. Even though I add the three figures together, if it does not give me 12, I will just write 12 there because I know it should be 12. You get what I just explained? Hello? Are you getting what I just explained? Hello? Okay. Cash and cash equivalents at the end is 40. Can you see? That means our answer is right. Eh.